Well, let's move our attention to the Kenyan market, see what we're seeing on the last trading day of the week, 4,713 points, and you're looking at a slight positive trend on the day overall. Looking at how the currency is faring this hour, 85.85, that's against the US dollar, pretty much flat as it stands. Let's unpack some of the numbers we've seen from the likes of Samir and ARM Cement this week. We've got Faith Atiti, research analyst at NIC Securities, standing by from our Nairobi studios. Faith, thanks for joining us. So before we get into some of the company results we've seen so far this week, we're seeing the market close slightly stronger today. What are you expecting in terms of trend and movement-wise overall for the market direction next week?
We're still looking at very positive support, both locally and internationally. We've seen foreign investors come back in the market. We've also seen strong support from the institutional investors. And this is supposed to carry on going forward, given there's still a lot of speculation on the companies that are yet to announce. There's also still quite significant support on stocks that still trading come dividend. And so, yes, this trend is expected to continue through the following week.
If you talk about foreigners coming back into the market, February wasn't a good month. For the first time in around a year, you saw foreigners net sellers of local equities selling around just over 10 billion shillings worth and purchasing around 6.2 or 6.3 billion shillings. So overall, foreigners net sellers in February. Do you think that that trend now is reversing since we've got the election results? And of course, everyone happy about the fact that we didn't see the violence as in the last election?
Yes, definitely. We are seeing a lot of support coming, especially on the banking sector. This week they were net buyers on Equity Bank. There's also significant support on KCB. The overall contribution to the market was about 50%, and this is supposed to. This was basically backed by the strong results by these banks, as well as there was also increased participation on EABL. And largely driven by the dividend status on the counter. We also see the stocks really sustain after even the books closed for the 1.5 dividend per share. And so, yes, there's a lot of support coming in. I think generally there's a lot of confidence in the judiciary process, even with the pending petition on the presidential results. People are very confident that the petition is going to be very partial. Most likely, it's too early to speculate. The matter is before the court. So there's all optimism that it's going to be positive. This has been seen by increased confidence by the institution generally in the market. They are coming up to take up more risks on equity. So yes, we are all confident. We're going to see more support from both foreigners and institutions.
Certainly is a good tone that we're hearing right now, and of course good for in terms of investor perception, investor appetite for investing in the local market. What about Samir Africa's results? Because you're looking at pre-tax profit there up 103%, but turnover only up 8%. So really helping, cost-saving initiatives really helping the company. But are you happy with the top-line growth overall from the company, given the fact that it's below 10%? So it's not certainly not as strong as 100% bottom-line growth.
Well, generally last year was still a tough year for most manufacturers. The interest rates are still relatively higher, so many people who are taking up loans to get products are really not into the market. So yes, it's 8%. As much as it's modest, it was really significant for the company, given this given the macroeconomic was still a challenge for them. So I think their focus towards the cost was really significant, and we've seen a significant improvement in the macro environment. Interest rates are coming down. The shilling was relatively stronger. So yes, the macroeconomic environment is still going to play in support of them, but this year we're expecting to see like really stronger growth in the top line. Generally, yeah.
Now, we've also seen ARM Cement reporting their results earlier this week, 31% increase there in pre-tax profits. It's the second largest cement producer in Kenya right now. It's been investing in factories, or investing in increasing capacity rather, in Dar es Salaam and Tanzania. What's your view on the outlook for this cement company, given the fact that many South African companies, Nigerian companies, there's a lot of activity and a lot of competition in Africa in this space specifically?
ARM has really positioned itself strategically to take advantage of this market. I think their sales are still going to be really strong given the capacity coming in. They have an advantage in that they have like really strong distribution channel. They have an edge when it comes to pricing, since they are able to maintain their cost at a relatively lower rate than the other players in the industry. They are producing their own clinker compared to Bamburi, which still exports a significant portion of the clinker they used to produce cement. So ARM still have like a really significant advantage over the other players. And whereas we've seen growing competition, we still think it's going to ride on the economies of scale resulting from the higher capacity, as well as the relatively lower cost. They are able to sell more products since they are relatively cheaper. So they are strategically positioned for this, and we expect the over 30% growth in the top line going forward. It's still going to sustain.